product from Gino Columbarat Music Factory. A product from Gino Columbarat Music Factory.
I bet you got it twisted, you don't know who to trust. So many player hating niggas trying to sound like us. Say they ready for the bump, but I don't think they know. Straight to the depths of hell is where them cowards go.
ਹੋ ਡਾਊਨਟਾਊਨ ਵਿੱਚ ਚੱਲ ਗਈ ਗੋਲੀ ਨਾ ਬੋਲਦਾ ਜੱਟਾਂ ਦਾ ਅਣਖਾਂ ਤੇ ਸੀ ਅੜੀ ਗਰਾਰੀ ਨਾ ਰੌਲਾ ਸੀ ਵੱਟਾਂ ਦਾ ਕਈ ਕਹਿੰਦੇ ਵਿੱਚ ਪਲਾਜ਼ੇ ਦੇਖੀਆਂ ਰਜਿਸਟਰਡ ਦੋ ਕਾਰਾਂ ਨੇ ਕੱਲ ਵੈਰੀ ਦਾ ਕੰਡਾ ਕੱਢਤਾ ਮਿਡਨਾਈਟ ਨੂੰ ਯਾਰਾਂ ਨੇ ਕੱਲ ਵੈਰੀ ਦਾ ਕੰਡਾ ਕੱਢਤਾ ਮਿਡਨਾਈਟ ਨੂੰ ਯਾਰਾਂ ਨੇ ਵੈਪਨ ਕੱਢ ਲੈ ਜੋ ਕੱਲ ਮੰਗਾਏ ਰਸ਼ੀਆ ਤੋਂ ਕਿੱਥੇ ਰੁਕਦੇ ਜੱਟ ਰਕਾਨੇ ਫੇਰ ਗਰਾਰੀਆਂ ਹੋ ਕੱਲੇ ਕੱਲੇ ਨੇ ਵੈਪਨ ਕੱਢ ਲੈ ਜੋ ਕੱਲ ਮੰਗਾਏ ਰਸ਼ੀਆ ਤੋਂ ਕਿੱਥੇ ਰੁਕਦੇ ਜੱਟ ਰਕਾਨੇ ਫੇਰ ਗਰਾਰੀਆਂ ਫਸੀਆਂ ਤੋਂ ਫਰੰਟ ਪੇਜ ਤੇ ਨਿਊਜ਼ ਛਾਪਤੀ ਅੱਜ ਵੱਡਿਆ ਅਖਬਾਰਾਂ ਨੇ ਕੱਲ ਵੈਰੀ ਦਾ ਕੰਡਾ ਕੱਢਤਾ ਮਿਡਨਾਈਟ ਨੂੰ ਯਾਰਾਂ ਨੇ ਕੱਲ ਵੈਰੀ ਦਾ ਕੰਡਾ ਕੱਢਤਾ ਮਿਡਨਾਈਟ ਨੂੰ ਯਾਰਾਂ ਨੇ ਓਏ ਨਕੈਰੀਆਂ ਕਰਦੇ ਫਿਰਦੇ ਮਾਮੇ ਸਕੈਚ ਬਣਾ ਕੇ ਸ਼ਕਲਾਂ ਦੇ ਕੱਥੇ ਛੱਡਣ ਨਿਸ਼ਾਨ ਪੈੜਾਂ ਦੇ ਜੱਟ ਨਾ ਕੱਚੇ ਅਕਲਾਂ ਦੇ ਓ ਨੈਕਸਟ ਲੈਵਲ ਜੇ ਯਾਰ ਲਾਡੀ ਦੇ ਰਾਕੀ ਰੋਕਣਾ ਹਾਰਾਂ ਨੇ ਕੱਲ ਵੈਰੀ ਦਾ ਕੰਡਾ ਕੱਢਤਾ ਮਿਡਨਾਈਟ ਨੂੰ ਯਾਰਾਂ ਨੇ ਕੱਲ ਵੈਰੀ ਦਾ ਕੰਡਾ ਕੱਢਤਾ ਮਿਡਨਾਈਟ ਨੂੰ ਓ ਕੱਲੇ ਕੱਲੇ ਦੇ ਕੋਲ ਸੀ ਅਸਲਾ ਯਾਰ ਨਾਲ ਤਾਂ ਕਾਹਦਾ ਮਸਲਾ ਨਾਈਫ ਹੌਕੀਆਂ ਰੱਖਣ ਨਿਆਣੇ ਮਰਦ ਨੇ ਰੱਖਦੇ ਭਰ ਕੇ ਰਫਲਾਂ ਰੋਕਿਆਂ ਕਿੱਥੋਂ ਰੁਕਦੇ ਨੇ ਵੈਰ ਸਾਡੇ ਨਾ ਮੁੱਕਦੇ ਨੇ ਅਸਲੇ ਦੀ ਜਿਹੜੇ ਗੱਲ ਕਰਦੇ ਸਾਲੇ ਨਾਮ ਮੇਰਾ ਸੁਣ ਲੁਕਦੇ ਨੇ ਓ ਕੌਕਿਆਂ ਵਾਲੇ ਚੋਬਰ ਪੂਰੇ ਕਿਸੇ ਕੋਲੋਂ ਨਾ ਦਬਦੇ ਨੇ ਜਿਹੜੇ ਆ ਗਏ ਰੇਂਜ ਸਾਡੀ ਵਿੱਚ ਨਾ ਦੁਨੀਆ ਤੋਂ ਲੱਭਦੇ ਨੇ ਓ ਖੁਸ਼ ਤਾਂ ਸ਼ਾਂਤ ਸਮੁੰਦਰ ਵਰਗਾ ਦੂਰ ਦੂਰ ਤੱਕ ਮਾਰਾਂ ਨੇ ਕੱਲ ਵੈਰੀ ਦਾ ਕੰਡਾ ਕੱਢਤਾ ਮਿਡਨਾਈਟ ਨੂੰ ਯਾਰਾਂ ਨੇ ਕੱਲ ਵੈਰੀ ਦਾ ਕੰਡਾ ਕੱਢਤਾ ਮਿਡਨਾਈਟ ਨੂੰ ਯਾਰਾਂ ਨੇ
low because Slack is big and so forth. Is there something coming up on the monetary inflation because of the increased liquidity? No, just because, velocity of money is not picking up. Then, does it question the impotence of central banks? The fact that the Fed may be against a financial stability wall because they want to, contain, circumscribe, I would say, the debt issues, maybe, but we don't see that yet. So for us, it's all transitory, and we just need to, benefit. Inflation is positive for equity. Inflation is positive for revenue for companies. Inflation is positive for a lot of sectors. So we need to look at the positive sides of this, finally, the economy getting a bit rosier than before.
Inflation is positive for equity. Ludovic, I know a lot of the focus is also on excess savings in Europe, and you have a great note on that. How will that develop, as vaccines kind of enter more mainstream and we reach critical vaccination mass?
We have a few examples now of how much of the accrued savings are being spent from China, the US, the UK, Israel. And it's not much, right? It's 1/4 of the savings we accrued that are finally being unleashed for consumption and investment purposes. So that means there is still a substantial residual amount of savings. And the question is, what are we going to do with these savings? How are we going to put it to productive use, especially in Europe, for the green and digital transitions, transformations ahead of us? But you just mentioned before I was live, you mentioned this M&A wave. The corporate sector has so much savings. In Europe, the 10 richest companies have accrued 50% more cash on balance sheet over the past year and a half. So there is cash, residual cash from COVID on both household balance sheet and corporate balance sheet. So we should see more consumption and investment if there is confidence, and we should see, on the corporate side, a lot more M&A than this, because the economy has been on pause, right? So we expect that on the household side, confidence, and forward visibility will bring a bit more consumption from the cash accrued. If we just get 5% more of the cash accrued unleashed into consumption, that's half a point of GDP. So this goes really fast, right? And on the corporate side, I expect that there will be a big investment cycle, and we believe that there will be a big investment cycle, maybe more in the US because of the crowding in effect of the Biden infrastructure plan and so forth. But in Europe, I also expect that there will be some. But of course, the forward visibility will be highly dependent on monetary and financial conditions, so what the Fed and the ECB will say, on tax policy, on wage policy. Those two are very important for that cycle, because you see protectionism and you see clientelistic type of announcement being very strong on the headlines, and this could scare companies.
Ludovic, picking up on the wage question, as you said, if I'm here in the US, my wages aren't necessarily going up, but I could be facing higher prices at the pump, and I could be paying more at the grocery store. And in theory, that could mean I pull back on discretionary spending. So is the recovery going to be dependent on me deploying some of those excess savings? Do you have to assume people are going to do that?
For now, we don't think that you're going to have to pay, that you're going to have compensate the loss of purchasing power due to inflation with your excess savings. But this could actually very well happen in the US, especially as inflation overwhelmed its days into 2022, right? And that's also why we're looking at the people on the retail investment, the Robinhood generation, trying to realize their gains to make meet ends, right? So that's going to be quite interesting to see the thirst for liquidity for some of these households that are a bit more vulnerable and whose wages are not increasing as fast as they should, alongside consumer price inflation, right? So we don't see that happening yet. But to be fair, that would be a nice rebalancing of the economy, right? So I expect most of the people that have savings on the deposit accounts, inflation will eat that up, right? So they either have to invest, consume, get the nominal signal, or they're going to have to invest that money so that they're hedged against inflation, right? Keeping the cash so that you are led to using that cash to compensate for inflation, that would be sad, and that would be putting you in an even more vulnerable space going forward. So I don't expect that to happen, but that's something to watch, of course. If inflation keeps getting, above 2.5-3% in the US for 2 consecutive years, for example.
Ludovic, thank you so much. Always a good conversation with Ludovic Subran, Chief Economist at Allianz. Now, coming up, it's a big day for retail results. We'll discuss what to expect with Rahul Sharma. He is Neve Capital Managing Director. It's Walmart, it's Macy's. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today?
And what does that mean? Combustion.
This is Bloomberg Surveillance Early Edition. I'm Kate Lund in New York with Francine Lockwood in London and Matt Miller in Berlin. Well, Francine, Matt, U.S. retailers are reporting earnings this week, giving investors another glimpse into the health of the consumer economy. In-store sales are expected to bounce back following the reopening of cities, stimulus checks, and pent-up demand from the pandemic. For more on this, Rahul Sharma, Managing Director at Need Capital, is joining us now. Pent-up demand from the pandemic, maybe, but for companies like Home Depot and Walmart, they already saw their businesses booming because of the pandemic, so they're facing really tough comparisons. Is the boom over yet?
Well, I think that is the key question. Now, in my opinion, really, what you're going to see is a lot of these COVID winners, they started off benefiting because the government mandated them to allow to remain open, right, when a lot of people were closed, the likes of Depot, likes of Walmart. I think what we're finding is even through this first quarter, business has been very strong, even while everyone else is reopening. To me, that's a clue that these companies have more, the business has more legs than a lot of people thought. And I think that's because, one, obviously they're in a sweet spot, particularly Home Depot as far as the home is concerned. But they're also not sitting still on their laurels. I think what you're seeing is they've used this pandemic to invest behind their business, be it in terms of more digitalization, be it better service to the consumer, be it higher wages to their employees, so they become more sticky. And therefore actually increasing the gap with somebody else who wasn't able to invest and actually found their business shrink and was therefore unable to invest. So I think that gap is growing, but you're absolutely right. I mean, clearly the comparisons are tougher. So from a momentum standpoint, some of these businesses, the likes of Depot, the likes of Target, Walmart, the numbers will optically look much, will not look quite as good as somebody who's benefiting from the big reopening.
Rahul, I was looking at Walmart. I think it bought this like virtual fitting room startup to try and, so people that can try things virtually instead of having to go to the stores. Are margins actually bigger for a lot of these companies if you buy online, or are they smaller?
Well, actually, interesting. It kind of depends on who the retailers that you're talking. Their store business is much more profitable than it is online. It's much more profitable than it is online. And one of the issues, I think, is that until now you had the customer coming in the store, basically browsing, buying a lot of high, putting in discretionary things apart from food. Now they're selecting their basket potentially to low quality items that are bulky, more expensive to ship. So they've been playing catch up with Amazon for a very long time. And I think that has been hurting margins for years. That trend hasn't shifted. I think what you're seeing with Walmart is they are still trying to play catch up with Amazon. And they had a good pandemic. They did make some moves, but Amazon is still so far ahead, has so many more economies of scale. And now the other issue with someone like a Walmart is in this pandemic, not only did they lose share to Amazon, they actually lost share to the likes of Kroger in terms of food, in terms of their food business. So I think that, coupled with the fact that wages are going up and they're kind of being dragged into paying more to their employees, that margin pressure, unfortunately, for that business isn't going away. So I think if they didn't see rising margins during COVID, life is getting a bit harder still here.
I can imagine Home Depot had a great pandemic. Everybody wanted to go there. Walmart, of course, also opened during the pandemic, and it's not likely a place you would want to buy clothes, whether you can try them online or not, Francine. It's more obviously of a food place and a hardware. I'm just saying I don't think that you would like to. I don't know your taste as well as maybe I could, but I'm not sure if you'd be stocking up on blazers at Walmart. Macy's is probably much more your style. And of course, they had a much worse pandemic. Rahul, is this a company that's going to bounce back big time once consumers are able to get out into retail stores and spend actual money?
I think there is some of that, Matt. I think if you look at the fact there is pent-up demand, we are social animals ultimately. We do like socializing in big contexts. We like going to stores. So I think you will see, and you've already seen a clue. You had Dillard's last week come out with some really strong numbers, and that was another down in the dumps department store. And I think you are going to see some of that with many of the apparel retailers. I think the question, and in the beginning, I think it will be quite strong because traffic will be strong. You won't need to discount that much to actually bring people into the stores. The question goes, let's say 6 months from now, many of these trends that, as I said, began during the pandemic, casualization, the fact that we all work from home a lot more, don't buy formal shirts the same way, for example, the whole slews of aisles in the big department stores that are just going to be irrelevant or certainly see much less demand for a while. Those issues have not gone away. Even before the pandemic, the likes of Ralph Lauren, the likes of Estee Lauder were talking about re-emphasizing their own stores away from the department stores. Ulta, their own direct channels for the likes of Estee Lauder. I think the issue to some extent for Macy's is the fight to stay relevant. Do they have the right brands 6 months down the road that still makes people want to come in? And the other question in the very short term, obviously, is the big benefit from the likes of JCPenney going out of business. So, capacity generally going out is helping them. But beyond that period, the same issues come back. I mean, are you an attractive format? Do you have the right brands? And the evidence for almost the last 20 years has not been great, quite honestly, for most of the department stores. But
Rahul, thanks very much, Rahul Sharma. Yeah. Rahul, Managing Director at Neve Capital, talking to us about we're going to get a slew of retail earnings coming out. Francine, I feel like Walmart is the place you go if you want a hunting vest. Do you look good in day-glow orange? Is that, I mean duck boots maybe?
As a rule, I kind of tried to buy Italian. I did try and get, so there was like a little sweatshirt with the Cosmo or the Planets, which my kids really wanted, from Walmart. I think it was like $5.99, and that, to get it shipped to London, it was like $34 extra. So that never happened. So that was my Walmart experience so far. Maybe we go together in Walmart and do a report on it. Now, later today, we'll get the reaction to Macy's results from the company's chairman and chief executive, Jeffrey Jeanette. That's at 3:30 p.m. in New York, 8:30 p.m. in London, and this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
When you're sitting in the only company in the world that has over 1,000 buildings in pretty much most important cities around the world, the demand for WeWork space today is higher than it was prior to the pandemic. So what the pandemic allowed WeWork allowed to reinvent itself, it allowed to learn how to operate on a most cost-flexible basis.
Well, that was Marcelo Claure, the WeWork Executive Chairman and SoftBank Group COO. He'll be part of day 2 of the Bloomberg Business Week Summit, bringing the magazine to life by exploring the how-to of technology, culture, and creativity. It starts at 10 a.m. in New York, 3 p.m. in London. Now let's get straight to Tom Keene, co-anchor of Bloomberg Surveillance, who joins me. Tom, I've been wondering what you were thinking. So I know you had a day off yesterday, but what you've been thinking about all of this M&A, T-Mobile, after the AT&T deal with Discovery.
It wasn't much of a day off. We were on the phone working the merger all day. I talked to our wonderful Tara LaChapelle about 5 p.m. yesterday. I think her work has just been really industry leading here on the emotion. And the next step here, Francine, is, well, you've got the Amazon percolating MGM story going on right now. Let's go to the chart. And this is what the first thing I thought when I thought of the really bungled opportunity here for Mr. Stevenson, Randall Stevenson at AT&T. This sort of, Francine, is the great divide back to 2015. And it's simply John Legere and T-Mobile versus what they did at AT&T Wireless. And it just is absolutely stunning, the difference that we've seen over 5 years.
Tom, the other thing, I mean, it just seems like the consolidation, you know, today there's talk about Amazon looking at MGM. It just feels like this fight for media content that we've been talking about for 3-4 years is really coming to the forefront and kind of taking over other M&A news.
Yeah, I have trouble with the word scale, but that's what they're doing. They're trying to find scale, and the reason they're trying to find scale is they're not sure there's profit there. So the only way you're going to get to a hope and dream of profit to pay off all the debt and get into the crowded market is to scale up. What does that mean? 1, 2, 3, maybe 4 players, Francine? The jury's out.
Yeah, and then you'll see what happens, of course, to the strategy in Asia. Tom, I'm looking forward to the program, and I know you're also speaking to Eric Adams, New York City mayoral candidate. Our Tom Keene there, co-anchor of Bloomberg Surveillance, joining us. Now, this is what else we're watching today. I know, Kaylee, you're looking very closely at some of these retail earnings.
I am. Walmart, Macy's, Home Depot, all coming up within the next hour or so. Home Depot actually in just about 5 minutes. My focus is really on what the forward guidance looks like, the demand outlook, especially with the effect of stimulus waning. And then also margins. How much pricing power are these players going to be able to exercise? And what does that mean for costs for consumers, Matt?
Yeah, speaking of costs for consumers, Lamborghini was out with some news today. Their $400,000 Aventador, actually one of my favorite cars, probably my favorite car that I've ever driven is the Aventador, and that includes the Bugatti Chiron, is going to eventually go electric. They're going to spend $1.8 billion to electrify these beautiful, beautiful Italian supercars, Fran.
There you go. I mean, everyone is going to try and go electric. Coming up in the next hour, Andrew Hollenhurst, Citi Chief U.S. Economist as well. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between governments and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
There's a lot of cash in the economy. There's a lot of cash on balance sheets, and this cash will get deployed one way or the other.
People, they don't like inflation. This is true, but they will tolerate it.
Inflation is going to be eating into the real wages of low-income households.
Transitory gives the impression of over and done very quickly. I don't think that's what we'll see.
When we get through the noise, when we get through the supply-demand imbalance, will prices stay sticky or not? The market seems to say no.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures up 1/3% on the S&P 500. We advanced 12 points in the FX market. Dollar weakness. Tom Keene, DXY, the dollar index, with an 89 handle.
Yeah, everybody frenzied up here about, the media thing and the mergers and all that, John, but I think we got to pay attention to the markets. We are really not at a range breakout, but we are at a critical point for foreign exchange. I know, John, you've been focused on stronger euro as the proxy there, but it's a lot of other places as well. It's a moment for a weaker dollar.
Well, there's the 122 handle on euro dollar, and we'll talk about the ECB pushback or the potential for it a little bit later. Got to talk about the earnings as well this morning, Tom. Walmart, Macy's, Home Depot, a lot coming up.
There's a lot coming up here. Always Home Depot is what you focus on. It's just so well run. You look at the margins there, really, John, to 100th of a percentage point, and we'll have to see what they say. Walmart, of course, with their challenges as well, particularly with an Apple equivalency there. The earnings will be great, but what it's about is a reaffirmation of this market. Look at the VIX, John, under 20, 19.43.
And when you were taking a long weekend, Lisa and I were talking about AT&T Discovery. Lisa, this morning, the focus MGM Studios and Amazon.
Yeah, it's really amazing the acceleration of some of the streaming consolidation. You think about how transformative last year has been with respect to how we deal with content, how much content, frankly, we absorb. And the question is whether the record pace of media deals that we see this year will be smart or perhaps will be hasty with respect to some of the changes going forward, John.
And there's the headline, Lisa, come from Home Depot. The first quarter comp sales coming in at plus 31%. The estimate 20%. That number's not too bad, Lisa, is it?
No, and it's fascinating because it really shows the haves and the have-nots from the pandemic, right? I mean, home improvement was really all the rage because everyone was staying home. And you've seen this in home builders. We're going to talk more about that in just a minute. But you continue to see certain retailers have strength. I wonder how that squares, John, with the retail numbers that we got on Friday that were highly disappointing.
EPS 386, the estimate $3.06. Net sales coming in at $37.5 billion, the estimate $34.86 billion. What have you done for me lately, a 20% gain year to date for Home Depot, I believe. 70% plus for Macy's, Tom, when we look at those numbers a little bit later this morning.
Dice through the headlines. To me, John, the GDP proxy here is Home Depot, first 90 days of the year, average ticket up 10.3%, and maybe that's a proxy of a 10% boom economy.
Early days in the pre-market, we're down about 0.1%. I went through the price action to get us started this morning. Your S&P 500 advancing 15 points. We bounced back from a mild day of losses, up a third of 1%.
Thought yesterday was
in the bond market, 164.54. Is that why you took the day off?
I took the day off trying to get the courage up. I couldn't pull.
Euro dollar 122.18. Home Depot breaking out a little bit now, Lisa, up by about 1.9% in early trading.
Yeah, I think that Tom was at Home Depot yesterday trying to get materials to build Vet Bill a new home. We know that he's really handy in that area, and we expect pictures, Tom.
Yeah.
Meanwhile, what I'm looking for today, 8:30 a.m., we've got U.S. April housing starts and building permits. We're expecting an ongoing increase in building permits as builders try to meet the incredible demand. We see this certainly in prices. We see this in a lack of inventory, slowing sales. This will just be another snapshot of that dynamic. 9 a.m., this to me is the event of the day. Treasury Secretary Janet Yellen will be speaking at a Chamber of Commerce event. Expect her to talk about how businesses need to accept higher taxes. She's going to try to sell that to them. She also may talk about inflation. Yes, she wants to steer away from trying to interfere with the Fed policy. However, the concept of transitory is not settling well with a lot of people. There was a May fund manager survey out of Bank of America this morning showing the highest level ever of investors surveyed saying they expect higher than average inflation ahead in the months to come. And then at 11 a.m., the Dallas Fed's Robert Kaplan will be speaking at the Atlanta Fed's conference on financial markets. I know that's confusing and a mouthful. Robert Kaplan, very interesting because he is the lone hawk on the Federal Reserve, John. He has come out yesterday and said that he still supports a rate hike as soon as 2022, very much going against the other Fed members.
The heritage of the hawks over at the Dallas Fed, Tom. Although I have to say a hawk these days is very different to a hawk back in the days of Mr. Fisher.
That's the key point. That's a key point, and I think that Dr. Kaplan would agree with you. Do I look tanned and rested? I mean, on radio, John,
you
it's
look
like
fantastic.
I'm working it.
You look great.
Yeah, I'm trying to
keep
keep
my validation?
It's like a Capri.
I don't think you do.
I had the Italian lotion that you had in Capri.
Oh,
That's what did it.
Some oil.
Yeah,
How did that
some
work
oil.
out?
Yeah, this is good.
Lisa, you mentioned that fund manager survey. I'll get this serious quickly. Expectations for a strong economy come in. For higher profits, they come in. Expectations for margins, 26%, down from 46%. That's a real turn that's starting to develop.
Well, and frankly, it's because you're seeing these higher prices for input prices. I mean, yesterday, if you look at the New York Empire Manufacturing Survey, it showed a record high for prices paid for the actual materials that some of these factories are purchasing. This does bleed into the bottom line, John, and I think that that's what you're seeing reflected.
Let's bring in Andrew Hollenhorst, shall we? City Chief, U.S. economist. Andrew, your words. We continue to see the Fed's publicly express confidence in the absence of persistent inflationary pressure as raising risk of a hawkish pivot late this year or in 2022. What does a hawkish pivot look like these days, Andrew?
Well, it certainly looks different than it has historically because we're coming from a scenario of a very dovish Fed, and I think that's part of what's going on with currencies, which Tom was mentioning. So we have a Fed that doesn't want to talk about tapering, that certainly doesn't want to talk about the first rate hike. Meanwhile, we have inflationary pressures which are building. There's certainly months that you can run here with this kind of dovish rhetoric. I think that story isn't over yet, but eventually it will be over. We have a labor market that looks tighter than maybe we thought it was. We have inflationary pressures that are picking up faster than maybe we thought they were. So I think it's coming, maybe not until the end of this year, maybe not until next year, but I think at some point we will be talking about less accommodation.
Yeah, but Andrew, the heart of the matter is, and I think this is an impossible guesstimate or forecast by anyone. We're trying to figure out when the boom ends, when we normalize. How have you tweaked that along the x-axis over the last couple of weeks at Citigroup?
Yeah, so the question is, what does normal look like in a post-pandemic economy that's reopening rapidly? So this quarter, we think we'll have somewhere around 10% growth. Even with that retail sales figure, even with that jobs figure, we think we're still on track for something like that. But we will be slowing from here. And I think that's a big question for markets is how do markets deal with a pace of growth that was so abnormally strong and is now slowing to something that looks more historically normal.
Is this time different, Andrew? I mean, we've gotten accustomed to inflation remaining below some of the more ambitious expectations of the Fed, and people are increasingly saying this time is different for a variety of reasons. Is it?
I think it's very different. I think it's especially very different for Fed policy. If you think about where we've been over the last several years, over the last over decade period, it was really a scenario where output was running below capacity, where you had no issues really about the potential to overheat the economy. Now we're in a scenario where at least temporarily we are running at a level of demand that is outstripping the productive capacity of the U.S. economy. You're seeing that in labor markets. You're seeing that in product markets. There is an open question about how long that continues for, but I think it's a more difficult scenario for the Fed because you actually have inflationary pressure. Meanwhile, you have an economy that's kind of just getting back to levels of activity that prevailed pre-pandemic.
Andrew, isn't that what we need to get people to invest in the productive capacity of the economy? We need demand to rip for once.
Yeah, and I think that's the bet that the Fed is making here, that they can stay dovish now, that demand can stay strong, that yes, you'll have some temporary inflationary pressure, and you'll come out on the other side of that, and you'll have a normalized economy, and you'll have inflation that comes back down again. Now, the issue that you might have is, do those inflationary expectations start to get embedded in the economy? Do they start to get embedded in the public mind? And that's what we're seeing in some of the survey data. If you look at the University of Michigan expectations, 5 to 10 year expectations, up to 3.1%, that's not a concerning number in and of itself, but the fact that we're moving quickly, the fact that we're getting to higher numbers than we've seen at least in recent years, I think that's something that's going to get the Fed's attention.
Andrew, we've got a DXY under 90. It's a big deal. What does a weak dollar mean for the United States export dynamic?
So, of course, a weak dollar is always going to be helpful for the export market. It makes it easier for foreign countries to buy U.S. exports. Really what the story has been for the U.S., though, has been the strength of imported goods. And maybe that's the more interesting story in the context of a weaker dollar, relatively higher import price, and a U.S. economy that's relying to some extent on those imported goods right now. So when we're thinking about inflation and kind of pulling on the productive capacity of the U.S., it's really the U.S. pulling on the productive capacity of the world right now and really kind of straining some of those global supply chains.
Andrew, we've got to leave it there. Andrew Hollenhorst, City Chief, US economist. Touching on Europe and the ECB and the euro just a little bit earlier this morning. Euro dollar with a 122 handle. June 10th is your next meeting for the ECB. And every day that passes, Tom, every week that passes, looking at this price action in FX and both the bond market as well, I think that meeting gets more interesting.
Well, it gets more interesting, but also it's the linearity of it. I'm bringing up the log chart here right now. What the log does, folks, is it gives you the slope in a percentage change. And I'm sorry, John, it's a nice move from a 117 up to 122. Why does that stop here? Why don't we go to 123 and on our way up to that June
124
meeting?
and 125.
Yeah, it's a
and
linear
Lisa,
function.
you'd have to believe at some point the governing council and a member of the executive board, somebody comes out and says, we don't like this.
Yeah, although at this point you have to also wonder against which cross, right? And China is sort of the more important cross to some people based on the trade currents with Europe than even perhaps the dollar, at least on the margins. My question is, at what point do rising yields become a financial stability concern that lead to a negative cycle, and how
She's
much?
Back. Love this. Tom, she was so bullish yesterday. Tom had a week off, and Lisa was so bullish and so optimistic.
It's
Carry
true.
on. Sorry for
been,
cutting you off.
No,
Carry
it's
on,
fine.
please.
It's absolutely been devastated. I'm actually back to my gloomy self. But there is this question of the financial stability aspects. I mean, how quickly can yields rise relative to some of the inflationary readings that we're getting now without threatening financial stability? And this is going to be an ongoing concern for central banks around the world.
Lisa, are you thinking more from the credit side or from the periphery, the sovereign side in Europe? Which side?
In Europe, I think that it's more from the sovereign side, more from the Italian government bond yields, because that's where you're seeing the real increase. And you were talking about this yesterday.
John, I miss this so much.
I can keep going, though. The credit's a very big concern, too. I can just keep going.
Just going to encourage it for the next couple of
Can we
hours.
just bring up a chestnut of a banner? Come on, let's go. For radio, we got to bring this up.
Uh-oh.
It is the pendulum of gloom.
There it is. It's back.
Oh, we're back in town.
The band is back together. 7 a.m. Eastern Time. Andrew Sheets will be joining us from Morgan Stanley. Looking forward to that this morning. Good morning. Euro dollar with a 122 handle. S&P 500 futures bouncing back just a little bit, up a third of 1%. 41.71. Call it 41.72 on the S&P. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The Biden administration has now shifted its approach to the violence in Gaza. President Biden told Prime Minister Benjamin Netanyahu he'd support a ceasefire between Israel and Hamas. For days, the president had publicly called for calm, but not for an end to the conflict. Since last week, Hamas militants have fired more than 3,100 rockets into Israel, while Israel has pummeled Gaza with air raids and artillery. Republican senators plan today to deliver their counteroffer to President Biden's infrastructure plan. The president has called for spending a little more than $2.2 trillion. Senator Lindsey Graham says the GOP proposal could be as high as $900 billion. Republicans are opposed to using tax hikes to pay for that spending. And it would be Amazon's biggest push into entertainment so far. Reportedly, the world's largest online retailer is in talks to buy the famed MGM studio, the fabled company behind the James Bond series. According to Variety, Amazon could pay about $9 billion. MGM would help bolster Amazon's Prime streaming service. And in the UK, more than 2,300 people have been infected with a highly transmissible India variant of the coronavirus. The government said early evidence suggests the vaccines still work against the strain. Meanwhile, an England-wide ban on households mixing indoors was relaxed Monday. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.